Good day, everyone, and welcome to today's webinar. Admiral Markets. Chris and I are together today, and we will be showing you review of trading indicators. So we came up with some indicators that might be useful to you. So we will not be presenting any systems or methods, but we will be reviewing some of the indicators that you could use in your trading. Okay, so before we start, quick risk disclaimer. Online education materials are available at Admiral Markets Estonia for a global audience, so take into consideration the information in this session is not suitable for everyone. If you want to get corresponding information on charting conditions and any other detail, you should visit Admiral Markets Global, select your country of residence, and contact an appropriate entity. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Final part explaining that Admiral Markets UK Ltd will take no responsibility for information accuracy. This is solely our opinion, and this webinar is for informational and educational purposes only. So, with having said that, we are ready to proceed. So, as you Sorry, I think that the sound was lost. The sound is back now, I think. So guys, let's do a quick sound check. Excellent. So what I said is that I will be showing tricks and RSI, and Chris will be showing Fibonacci and Alligator. So one thing, this is not a trading system. These are some of the tricks you can use with corresponding indicators, and you could possibly incorporate it into your own trading strategies. Okay, there are a lot of different combinations, different features of indicators, of oscillators, of candlestick charting, right? But you need to know all these tricks, because some of those tricks could probably help you determine some decisions. So let's say that back in days, just a slight digression, when I was, let's say, 3-year, 4-year-old trader, I met a guy who was actually trading trend lines, and his name was Andy, and he moved to Australia. We traded together sometime, and he showed me some tricks that he did with those trend lines, and I will show you some of those tricks today. But the thing is that there are so many interesting combinations that you can incorporate. So even if you don't have a clear system yet, you can always try to pick up those little tips and tricks Chris and I usually throw down and use it to your advantage. Okay, so that is what we will do today. So oscillator, its tricks is an oscillator. It definitely identifies overbought and oversold conditions. And you will probably read a lot across the net that tricks is good for identifying overbought and oversold conditions. I agree with it. But in my opinion, and what I basically learned from that tip that my mate Andy taught me was actually to identify momentum with tricks. Because, you know, I didn't use a lot of indicators back in past. I was mostly focused on my price naked trading, practical naked trading that I've been teaching you in price action trading school. So PNT was my primary way how I traded the price. PNT, that is price action trading school. So basically it's similar, right? And now, but I felt the urge that I actually needed to know some of those things also professional traders do. So I showed him how I trade trend lines, how I use trend lines, and then he told me, okay, because you are such an avid user of trend lines, I have some tips and tricks how you can actually filter out trend line bounces, trend line spots with using tricks and stochastic indicator. And I said, okay, why not? So I know that tricks used to identify overbought and oversold conditions. But then he showed me that actually you can use it as momentum identifier. So tricks is momentum indicator also. Okay? And with all oscillators, that is good thing. You can use tricks to identify divergence. Okay, so now remember, guys, you already know about divergence. We covered it also in price action trading school. So the thing is, you can basically identify divergence with any oscillator, right? So you can identify divergence. So is it OBV, or on balanced volume? Is it stochastic? Is it RSI? Tricks is also an interesting way to look for divergence. Because my opinion is that momentum indicators are best for divergence. Okay? Such as MACD. You know that we prefer MACD. At least I prefer MACD. Chris prefers awesome oscillator, but that is also a good thing because MACD and awesome are very similar. But the thing is, all those oscillators can be used for divergence, and that's a good thing. And those are momentum. Tricks is momentum. MACD is momentum indicator. Why you need momentum? Because divergence is the earliest sign for a trend reversal, right? When you see a divergence at important support and resistance, you know that there is an opportunity to actually take a counter trend trade. Now watch this, guys. Let's say that the price is going up, 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 and up, and it hits daily resistance. So this is daily resistance, right? Now you go back to the past, watching how the price behaved in history. Okay, so we need to watch the history. And you can see that the price in the history already touched this level and started to drop. Okay, so this is history. This is present. Okay, what it equals? Future. History plus present equals future outcome. That is how I look at the things. Now, historical sellers were exactly at the same spot where today's sellers are, right? Potential sellers. Because in the history, from this region, you saw a lot of selling. Now, what happens is you spot a divergence, let's say bearish divergence, okay? And suddenly price starts to drop because chances are when you see historical selling align with daily resistance plus bearish divergence, the price will probably turn and will give you another trading opportunity. That is actually a very good thing because not a lot of traders know how to trade counter trend. From my personal experience, most traders actually took some random trades, okay, to actually trade the market counter trend. And that is definitely a wrong way to do, because if you know about price action, you know that picking up random levels just because you think the price is high or low, it won't do any good, guys, okay? It won't do any good. So momentum indicators are there to give us the earliest possible cue about a possible U-turn in the market, and we should be there to actually capture the movement and trade it. So general consensus for tricks is that it is both overbought and momentum oversold, overbought oversold, or OBOS indicator, but also momentum indicator. Now, calculation for tricks is pretty much easy. You have smooth price with 40 period exponential moving average. Then you smooth EMA from this step with 14 period exponential moving average. Then you smooth the EMA that you got from this step with 14 exponential moving average. So three smoothie steps are enough to give us the tricks. So divide the value, triple smooth it of today from the one of yesterday, and you will get the tricks calculation. Okay, so yeah, usually it's EMA 14. Okay, it's usually EMA 14. And you do it like that. But Ilya, you don't need actually to do that manually, because you should have tricks indicator. Of course, if you don't have tricks indicator, I will send you. Okay, I will send you no problems. Just send me an email and I will send you the indicator. Okay, so probably as I know, MT4 does not have it by default, so you probably need to search for it, but I have it there, so just send me an email and you will get the tricks indicator. Okay, so tricks helps confirm trends. Okay, tricks will help you to confirm trends. It can give you some trade signals. Because of divergence, it can give you trend reversals. Okay, it is good for momentum, as I already explained. Okay, and it's good for actually riding the trend. If you think that the trend will continue, you can actually ride the trend with tricks. So I use tricks as a momentum indicator. Positive value suggests momentum is increasing. Negative value suggests momentum is decreasing. Tricks divergence. Well, guys, you know about divergence, but let us confirm once more. Bullish divergence is when the price makes a lower low. Okay, so price makes a lower low, this is the top, but the tricks makes a higher low, this is the bottom, and you will see a higher low. Okay, yes, Leon, if you a question, can you email me for indicator? Yes, Leon, just email me for indicator and you will get it. Of course, it's free. Why you should not wonder about it. Okay, so just send me an email and you will get the indicator, as always, for free, guys. No worries about it. So bearish divergence is when price makes a higher high, so higher high here, but the tricks makes a lower high. So this is the top, this is the top. So you know about it. If you're still not sure about divergence, well, guys, then you should definitely visit Price Action Trading School. Okay, that was one of the important lessons. Okay, so that is how we can spot tricks divergence. I personally used 13 period tricks, trend lines, zero line crosses and trend lines while waiting for the price to move above or below, okay, above or below the zero line, okay. So once more, tricks is momentum indicator, while above zero line it is positive, while below zero line it is negative, okay. Also divergence, okay, regular bearish, regular bullish divergence, and this is how I will show you actually and teach you how to use this indicator. Okay, so this is what you need to have: tricks period 13, trend lines, zero line crosses, and waiting for the price to move above or below the zero line. Okay, so this is tricks indicator, trend lines here, and this is momentum. Okay, now let's see it on live chart. Here it is, guys. Live chart here, and actually very easy to spot the indicator and trend line. So let's chart a bit. So here we can see head and shoulders, right? So this is how you can actually confirm head and shoulders. So here you can see head and shoulders, left, head, right, okay? See? Head and shoulders. Now, if you don't want to actually take a trade at the top of the right shoulder, you can always watch for the break of a trend line or a neckline. So, assuming that the price was here, we can draw a trend line connecting these 2 points, okay? And actually, here you see, you actually want to see this. Tricks cross below zero line and trend line cross. That confirms momentum, okay? See here. So here we see a cross. So red will always cross first, okay? So red cross first, and it will be followed by this blue dotted line, okay? That line you use to ride the price, while red line is to confirm the entry or the signal or whatever it confirms. In this case, it confirms momentum. Now watch this, guys. This is also, I can say this is also a part of practical naked trading. Because when you have a bearish pattern, such as head and shoulders, you just need a confirmation. Confirmation is momentum. Momentum is confirmed by a momentum indicator. So that is price action also, guys. A lot of traders simply trade break of necklines without any confirmation. But tell me, honestly, how many times have you tried to short head and shoulders just to be caught in a false breakout? That can happen. So that is why it's good to gauge the momentum. Momentum is very, very, very serious thing in trading, guys. Okay? You have price action. You have the indicator that confirms what price action is actually telling you. Okay? And in this example, it tells you go short. Watch this, guys. Now you don't need to make breakout, retest, breakout, pullback, continuation. Trigger happy trade sometimes is more than enough. So if this was a cross, a break of this trend line, You see, momentum has already gone. When I need to say, if this was the cross, that it was indeed, momentum had already gone before this cross. So first we saw bearish momentum, but still trend line was intact here. Watch this. Bearish momentum, trend line holds. Now this is the break, guys. And watch this. Here, this is your exit. Because Trix was already overbought and oversold, and you see red crossing blue. That indicates that overbought, that oversold condition might actually spike the price up, which happened. But watch this, guys. It never break the zero line. So we still had bearish momentum. Okay? I think that this can be very interesting for you. And yes, Trix is a bit faster than MACD, indeed. On 13 period, it is a little bit faster because MACD is generally lagging indicator. 12.26.9 trade IMX is asking, do you mean Trix is faster indicator than MACD? Yeah, on these settings it is. Okay, so the thing is, MACD, I love MACD, and you know that I'm a very avid user of MACD. But Trix is also a good momentum identifier. Now, how can we actually take trades to the upside? Well, guys, clear here. You see here, there wasn't a clear break of this zero line, but here we have a clear break of zero line. Before that, you need to spot a pattern or a trend line. Okay, pattern on a trend line. Well, let me see if there was any tradable pattern here. I can see something here that was W, but it's much easier when I zoom out. Yes, W here. W here. You see, guys, W. How we trade W? When 0.2 breaks. This is 0.2 here, guys. This is 0.2. 1, 2, 3. This is Adam and Adam, actually. This is Adam and Adam pattern. This is a variation of W. It's called Adam and Adam. I have already covered it in price action trading school. So this is bullish, very bullish, okay? Especially because Adam and Adam is more bullish than W. So buyers here, buyers there, 0.2. 1, 2, 3. Okay, 0.2 needs to be broken. That is how you trade Adam and Adam and bullish W. What happens is here, actually, this was the break, okay? This was the break. So the thing is, you should either consider, this is, as I told you, from overbought, oversold condition, okay, break, this is when overbought, oversold condition broke, and this is just a confirmation that this trade might continue. So, trend line here, okay, for late entry, but you see here momentum, watch this momentum, very clear momentum, not a coincidence that it actually broke here. See, bullish candle when Trix actually broke through zero line. So late entry here and early entry here. From overbought, oversold condition, Adam and Adam was successful. And then there was a late entry. Actually, you could also put this line here, waiting for momentum cross. But still, this is the only valid momentum candle here, because look at how huge it is. Okay, so you could trade it like this: place a trend line, wait for a momentum break, and as soon as momentum break kicks in, okay, here, there, see, break of the trend line, bang, the trade went up. Now, before I move on to RSI, I was a bit long. I've been a bit long with this presentation of Trix. I need to say that because this is momentum indicator, you can try to incorporate it into some momentum trading systems. So not systems like I use for Camarilla MACD, for example, when I do the analysis, because it's hard to do the analysis with simply tricks indicator. This is momentum indicator. And let's say when I analyze charts, I always watch for POC zones. There is no POC zones with tricks indicator. So this is for scalping, for breakout trades, and you will probably find most of the time that scalping systems use tricks indicator. But it's a good thing to know that actually you can take breakout trades with this small trick that I was showing you, and you will find a lot of different opportunities, guys, for actually trading. Look at this, another head and shoulders here. Well, it might look easy, but it is easy. Look at this. Trix was bearish here, very, very bearish here, and you see what happened here. This was a final confirmation of trend line break. Trix bearish already. So it's even sometimes faster than the price, you see. Well, that is good. Try to combine it, at least for the time being. Try to use head and shoulders and tricks breakouts. Now let's move on to my second part. I really need to be fast with this. RSI, Relative Strength Index. Okay, so quick introduction to RSI. Wells Builder created to display the strength behind the move and to spot a possible exhaustion. Okay, so RSI, compared and contrary to many opinions that you will see on the internet, I have my own personal opinion that RSI is actually leading indicator. It's not lagging indicator. And back in time, in 2011 or 12, I was actually using RSI divergence, and I'm 100% sure that it's a leading indicator. Okay. Ilya is asking, what is better, RSI, CCR, stochastic? It doesn't matter, Ilya. All are good for if you know how to use it properly. So there is no, you cannot ask question what is better indicator. Some people prefer RSI, some CCI, some people prefer stochastic. It depends from a system, okay? So I will answer your questions. Just let me explain about RSI, then I will answer questions, and then Chris will proceed. So RSI is oscillator, okay? It gives us a trend line. It can give us divergence. It also can show a breakout of trend lines, okay? Also momentum. It can be overbought and oversold. And you can also use special pattern that is RSI failure swing that I will be showing you today, okay? So RSI is actually an oscillator, okay? RSI 14, 70, 30, you will usually find these settings, okay? And it's okay, okay? It's just to show you actually overbought or oversold conditions. Now, as I said, RSI is leading indicator following the price. 70 is overbought, 30 is oversold level. Some people put 50 line here, and consensus is when RSI is above 50, trend is bullish. When RSI is below 50, trend is bearish. I cannot confirm that because how I use trend lines, I use it completely different way, okay? And yes, you can see that this is how a lot of people will tell you. Above 50 is bullish, below 50, but I do it a little bit differently, okay? So this is general consensus. But as I say, I personally didn't pay any attention to 50, indeed. I never. So let's see how you do failure swings. And I will show you then how you can actually use trend lines with RSI. So failure swings are much better on higher time frames, okay? There are both bullish and bearish failure swings. When RSI goes above the overbought line, okay, making a new high, it should bounce back below, forming lower high below overbought. It goes below previous low, and that is your sell point, okay? RSI bullish failure swing. RSI goes below the oversold line, making new low, bounces back above it, forming a higher low, and goes above the previous high buy point. Okay. Now, if you want to snapshot this screen, okay, go ahead. I will give you some time, and then we will actually move on to live chart. Okay. So take a screenshot, snapshot it. Here. So high above overbought has been formed. Okay, this is overbought. Lower high below overbought line. This is lower high compared to this. See? But then we see a break of this trend line that is a sell spot. Okay? See here? And this is your sell spot. Have in mind, I show this on 15-minute time frame, but actually those are good on higher time frames. This is bullish. Okay, you see on daily, let's say. Low below oversold has been formed. Now this is higher low. Okay, this is higher low. And soon this trend line here has been broken. Okay. RSI goes above 0.2, above this line here, and actually that is confirmed here with the price also. So those are failure swings. And now I will show you how you can actually make trend lines with RSI. So here we go, insert, indicators. Okay, and we go with RSI 14, okay, level 7030, okay, like this. Now we will zoom in, okay, and we can delete this tricks indicator now. Okay, here. See, guys, it's much better when we zoom out. We don't need to be fully zoomed in. Okay. So here, guys, you can place trend lines on your RSI indicator. Okay, like this, because RSI, as I told you, it is a leading indicator. You just need to align it with other price tools. So here we see a trend line, and where the price went here, okay, line break, and watch this, it went up, right? So these are general ideas how you can actually make maybe your own system, or how you can incorporate these tools into your own method. Here we see another trend line, okay, very, very big trend line, and you see here where the price went after it broke this trend line. Well, it went up here, see? And then it went below this trend line again. Now watch these touches. One touch, two touch above trend line. Price goes up. Then it goes below the trend line. And this was a retest. Okay. Also, guys, you can make channels with RSI. Okay. You can also make channels with RSI. Okay. Here. Actually, like this, you see, and watch this, and you can also see it here. You see, sometimes even it's faster than the price. You see, there was a RSI channel break. See, I will move this line. This was the break, and look what the price told us. So if you actually took this channel of RSI break here, price made much better movement than here. Okay, this was basically a fake out here. So you can draw these patterns also on RSI indicator. It sounds weird, I know, maybe something that you never ever thought of. But actually it is very, very good when you try to spot it. Look at this. How good it is. Huh? See? Even V-shaped reversals here. Watch this. V-shaped reversal and trend line break. See? V-shaped reversal. So a lot of different ways to actually use RSI. You can also use it, as I was telling you, for overbought and oversold, for divergence, because this is an oscillator. You can use it for divergence. But it's a good thing that all of these indicators can be combined into a trading system. Okay. Now, before I hand over the webinar to Chris, I need to answer a question. Trade IMX, after the breakout with tricks, how do we know if we can do if price is doing retracement or reversal trend? As I was telling you, if you do a breakout, I was teaching that on my previous webinars, you don't know if the price will make a reversal or retracement. We cannot know that. How can we know that? If we knew that, everyone probably would be millionaires, right? So we can only assume, okay? We can only assume. We don't know, but we can assume, okay? So the thing is that with tricks indicator, you should follow breakout of zero lines. When it goes above zero line, that is a potential breakout trade, breakout from the trend line, as I was showing. When it goes below zero line, you actually want to trade it with other confluence points to the short side. Okay. So here you see what the price said. Actually, it was a break of trend line, and tricks confirmation came exactly at this spot. So here at the close of this, actually you could have made like a bullish trade, or you could use this one. Okay, here. If you use these trend lines, you see there are a lot of different combinations, and tricks is there to actually give you momentum, because when you trade momentum, you are not interested whether it will be retracement or reversal, okay? Because the thing is, you will be fast on your fingers. You will mostly be scalping, right? Mostly be scalping or making breakout trades. So that is why you need to be fast. Okay. So now I need to hand over webinar to Chris. Guys, this webinar is being recorded. It will be uploaded. So if you have any questions, don't hesitate to ask. Thanks for your patience.
Thank you so much. Great stuff. So let me hand over the charts here. Let's see. All right, there we go. Hopefully you can see that. All righty. So do you see the charts now? Do you see basically this price action indicator? That's what I'm going to talk about. And then after that, later on, about Fibonacci and alligator and fractals, combining them, as I showed yesterday. In fact, we had a webinar on that as well, but I want to dive into that a bit more. But first of all, this price action indicator. So if you can see these texts and basically these buttons here, these red and blues, this is the indicator giving indication of a price action signal. All right, so do you see that? Let me first ask and confirm before I continue. Do you see that indicator? Great. All right, so this is cool because I like this one because price action, of course, is really what it's all about. It's so important, and Nenad and I are really big fans of it, but we do use occasional indicators to support our trading, and we use a couple in most cases. So you got wide spectrum of traders. You got some that are very fanatic in only using price action. Nenad and I that are kind of in between. We use price action combined with some support and resistance levels, fibs, an oscillator, and then you have the other side that's opposite of price action with a ton of indicators. I don't know, maybe 15 or 20 or I don't know, who knows how many. And then everything becomes even difficult to see the chart, right? So I think we're kind of in between. We're kind of the middle ground there, I would say. But this is a cool indicator because it makes everything easy to spot candlestick patterns. So if you have any problems with spotting patterns, if you sometimes miss patterns or you just don't see them, and that's nothing wrong with that, by the way. Everyone has their own kind of, you train your own perspective, and it takes time to really see patterns quickly and fast. I talked about patterns on Tuesday, and it just takes people time to see patterns, and it's not strange. It takes practice training to spot them quickly, and all of them, in fact. So that's the same with candlestick patterns. So if you think that you can improve, this is a great way of improving. It's like training wheels because you see it. Obviously, the indicator indicates that candlestick immediately. So what does all these buttons mean? Well, blue basically is below the candle. That means that it's a bull candlestick pattern. Red is a bear candlestick pattern and will be above the candle. And the text is on the left of the chart. So the text is basically explaining what kind of candlestick pattern it is. You will see the abbreviation above this candle right here, as you can see. That just shows you kind of what the abbreviation is, and then you go to the left, and then you see what type of candlestick pattern it is. So on the chart, basically, you would have the quick go-to explanation. Then you can look on the left, and you'll find out exactly what pattern that is. And you know also from the red or blue whether it's bullish or bearish. So that's very simple, basically. You already have that info right there. So here you can see it says, well, maybe you can't see it, but I'm telling you, it's DC. So, that is dark cloud cover. It's bearish because there's a red dot above the candle. So that's a bearish candlestick pattern, right? Very easy. Now, by the way, before I forget, if you're interested in this, I can send this indicator to you. Just send me an email to this email address, all right? I forgot to mention that. And I can send you this indicator if you find out that you find it interesting after the end of the webinar. You can get that. Let me just put that in the chat as well. All right, there we go. Okay, so let's zoom in here. So this is, I think, clear, right? This is pretty straightforward. I think all of these abbreviations, once again, have an explanation on the left, and you can just match it, and you'll know what candlestick pattern it is, and you can learn as you go along, and you won't be scared that you miss something when trading candlestick patterns. So I wanted to show you an example how you could just basically trade with this indicator as is, or at least I don't want to say that I don't want to advocate necessarily that you can only trade with this, but I did a small test with only this indicator in mind. And mind you, it's a very small test, so you don't want to make too many conclusions about it. But in that test, I used these simple rules. Okay, I used, as soon as there's a candlestick pattern, I took an entry upon candle close. I put the stop loss 5 pips above or below a candle, above it if it's a bearish setup. In this case, it is a bearish setup, right? The example I'm showing, the red box. I used the 4-hour chart. It was on the dollar yen, all right? The next one was, at least, this is the euro dollar example. Let's see. If the candle was 20 pips or smaller, I used the previous high or low, or if there was no previous candle high or low available, I skipped it. And I skipped huge candles that were like 200-300 pips, okay? So those are just a couple of the ground rules here. Stop loss just above the candle or below the candle. 4-hour chart. Small candles, I would be cautious of using the stop loss below the high or low. And I skipped huge candles. So this is the dollar yen. The trades I back tested, and the blue boxes are where there were winning trades. The red boxes where there were losing trades. And I'll show you the stats in just a second. There were 40 trades. That's not much. So it's just an example. It's just to show you what one could do with this indicator, what one could try with any indicator, by the way, with paper testing. 40 trades is kind of the minimum. It's actually, in this case, not enough because it was only 1 month of testing on one pair. So it's like let's say, a good base. And then you can test another pair, another time, well, maybe not with time frame, but you can test another month or year even, or 2 or 3 or more. The more the better. And you can see if the results match that. Okay. And if it doesn't, and you see wide swings, then this could be kind of, these 40 trades could be an exception, right? If you see similar results, then you get more kind of verification that this indicator as a standalone could be already interesting. 40 trades is kind of the minimum, right? Because if you have less, you can't say anything about it. If you have 40, it's kind of the bare minimum you need to have to say anything reasonable about it. All right. So blue boxes, you can see now are winners, and you can see that because of the stop loss size, sometimes the stop loss size is very small. So even reversal trades here, ironically, has such a small stop loss that even these small little dips here were enough to make trades, winning trades. All right, because I was looking at 1-to-1 R2R at first. Okay, so was enough actually. Ironically, even trade here, you would say, those are small spaces, right? Obviously, these trades did well because look at that; those were big reversals, right? So those are not surprising. But even some of these smaller moves like this were sometimes enough. The ones that really didn't work well was when there was huge momentum like this, and here you just had some counter trend signals that didn't go anywhere, and that can happen. So if we look at the stats, here were the winning trades on the bull side, and then you got a couple of losses here. You had a couple of bear trade wins as well, as you can see, and more losses though. The -1s are losses. The +1s are wins. Right? So the red circles are all losses, the blue circles are wins. In the first column, you see what the profit would have been if you just let it run to the max, the very max potential. I'm not saying we can catch every single pip of that. By no means, I don't want to suggest that. But that's like the pip pool, as Nenad calls it. This is the risk, the stop loss size. And the third column is the R2R, the reward to risk ratio of all those trades. The same for bull and bear, right? Same thing. Reward, max reward, risk, R2R, and whether it's a profit or loss with the 1-to-1 target. All right, so some of these R2Rs are great, right? 11-to-1, but once again, you only got 1-to-1 because there was a TP in this example. So when we look at the stats, 85% were winners on longs, 50% were winners on shorts. With 1-to-1 R2R, that means 27 profit, 13 losses, 40 trades means 14 units of reward profit. So if you take 1% risk, right, on all of these trades, that would be then 14% profit, right? Or if you take a 0.5% risk, that would be 7% profit. So the question is that optimal? Maybe not. Of course, you never want to go too far with optimizing, but let's say we would do the same, but aim for a 2-to-1 reward to risk. What win ratio would we need to justify that? Because at this moment, with a 1-to-1 R2R, we have 14 units of reward, right? So if we go to a 2-to-1 R2R, we better make more money, because if it's the same, I think it's better to have a higher win ratio. If it's lower, well, it's definitely better to have a higher win ratio. You get my thinking, right? If we get with 1-to-1 R2R target, we get 14 units. Well, with a 2-to-1, we want to have more than 14 units, right? So with that in mind, what win ratio do we need to get 14 units with a 2-to-1 R2R? And I did the stats, and we would need to get at least 45% wins with a 2-to-1 R2R for that to make sense. So did we, in this example, get up to 45%? Did we make it? And the answer is yes. We lost 5 trades that were winners that turned into losses. Why? Because their R2R was less than 2-to-1, 1.55, 1.6, 1.4, 1.9, 1.8. So those failed to reach the 2-to-1 ratio, therefore turned into losses. So we had 5 trades that were winners with a 1-to-1 that turned into a loss. So, all right, 5 trades. So we lost 5 trades. So we had 27 wins with a 1-to-1, went down to 22. But because we won twice as much, we actually earned 26% instead of 14. So we almost doubled the reward, which is great and makes it worth those results. So a small little difference already boosts the potential. Now the win percentage was 55%, by the way, 55%. Whereas here with a 1-to-1 it was 68%. So obviously, of course, our win percentage went down from 68 to 55, but we got a lot of benefit from that. Alrighty, so we can see here a chart basically before, actually the period before the test was done. And the blue boxes were wins, the red boxes were losses. So you can see, you got to test this because there are large areas here that were losses, and that could be a big drawdown, right? This was a great zone with more wins. So it's not that simple as I want to say it. The only thing I want to show is that a simple indicator like that uses candlesticks and it indeed identifies patterns on its own without us having to do it is a very cool indicator because it's so closely related to price action. Very little lag and gives a lot of info. All right, so this on its own is already, I think, valuable. Then if you add other things to it, like support and resistance levels, patterns, because what do we see here, for instance, right? Maybe here, let's take a look at this. If we add other analysis to this chart, what do we see then? Well, we see a lot of things. We see trend lines, we see patterns, we see momentum, we see trends, support or resistance, and then we can judge which patterns make sense, which ones don't, and try to filter out the ones that are not good. For instance, here we see a triangle looking at the red line here and the blue line. So our candlestick patterns at the red line, are those interesting? Yeah, definitely. Are candlestick patterns at the blue line, bearish candlestick patterns at the blue line, interesting? Bearish candlestick patterns at the blue line here, are they interesting? What do you think? Marco says no. Bearish candlestick patterns, the green circles there at the blue line. And the answer is no. Absolutely not. Good reason to skip it, right? No doubt about it. So bearish candlestick patterns at resistance, great. At support, not good. Obviously, the same holds true for the opposite, where we have, let's see. Let me see if I can find something here. All right, here. Bullish candlestick patterns at the bottom here. Good. We got a candlestick. We got a break of the trend line, break of resistance. We got momentum to the upside. So if you get a triangle after that momentum to the upside, and you get a candlestick pattern at support, boom. That's what we want. Perfect. We got uptrend. We got a bullish break. We got impulse to the upside. Hopefully, there's no strong resistance level. I mean, there's it just broke resistance, and the horizontal resistance, as far as we can see, is up in here. So that should be fine. So we got, when we do our technicals, we got all kind of green marks for patterns, trend, and support and resistance. Alrighty. So using candlestick patterns, it's great for pullbacks. It's great for ranges like this. It's great for even reversals. At some point, the market will reverse like it does here. So even though it's risky to take reversals, some point, if there's enough confirmation, if there's enough confluence, it's okay to take reversals. And candlestick patterns are great signals of if there's enough confluence to take a reversal. So they are good for reversals. Just make sure that you don't take them too early, because then there'll be losses. So these candlestick patterns are great for pullbacks, like here, like the blue circle. They're great for reversals, and they're great for ranges. Ranges, pullbacks, reversals. Now with breakouts, I think you want to be careful, because if you see a candlestick pattern upon a breakout, I think that's always a bit more dangerous. So I have a question for you. I threw a lot of stats to you, and I know that that could be not everyone is into that. So I want to make it a bit interactive. What do you think about the setup with the red arrow? Do you think it's a good setup, or do you think it's a bad setup? So let me give you some details. We have basically a downtrend in play. We got resistance lines here. One of these resistance lines has been broken. Two are still intact. You see that price is at a 38.2 fib, and you see that price has basically making some kind of pattern here as well, which is looking like a corrective pattern. And you see a candlestick pattern, a bearish candlestick pattern, because there's a red dot above the bearish candle. We can't see it, but as far as I would guess, it's some kind of probably some bearish engulfing candle. So I hope you can see it, first of all. But where I have the red circle on the right, with the information I just gave you, do you think it's a good setup or it's a bad setup? And if you're doubting, just write not sure. So the ball is now in your court. Now you might think I don't have enough information. Just go with the information that you have now. And if you're not sure, you can just guess. It's you're not gonna there's no punishment in getting a wrong answer here. So the ones that have a good answer get this indicator for free. No, that's also not true, because everyone can get this for free. Just use my email and I'll send that to you. All right, so I'll give you a couple of seconds there for thinking about that. How about a half a minute? I got two answers so far. I have, I think it's something like, I forgot the name, Candle Star. All right, couple last seconds here. All right, cool. So we got two people saying not sure. Basically, we have three people saying good, and we have one indicating a deeper fib. One saying never. So that, I guess, is against it. So three yes, three maybe, one no. So 3-3-1. All right. Well, in all honesty, all these answers are correct. Bit of a trick question. No, I mean I think it's a good signal. Bearish engulfing twins, at a fib, at resistance, corrective pattern. I think with the information we have, it's fine. I think that that should be okay. And one could speculate maybe if it's a shallow fib, but considering the strong candle, the strong candlestick pattern, I think it's okay. But really, all answers are good here. If there's any reason that you think it should be filtered out, you can do that. You can skip these these candlestick patterns, right? And wait for the ones you like. That's the beauty of it. So really, they're all answers are good. In my opinion, I think it, it's probably would probably be good, right? And, depending on higher time frames and stuff. Just looking at this time frame, I think it's good. But that's my personal opinion. It actually did move down lower, by the way. I saw after that, so it went down to below this bottom. Maybe we can take a look quickly here. There we go. We got a couple of candles still going lower. Then we got a pin bar as it broke the bottom. The price has been correcting since then. That's what happened after that. All right, Fibonacci and Alligator, we actually ran out of time, but let's go through it. Wednesday, we talked about this strategy. And when I use the Alligator and fractals, I just place the fib. So the Alligator is for direction. The fractal is for placement. Depending on the angle of the alignment, it's either bullish or bearish, obviously. So 4-hour chart, basically if the Alligator is bullishly aligned, I would use the fractals here to place from bottom to top. Then look for pullback to these fibs and look for bounces at these fibs. And you can use the candlestick pattern to look for confirmations at these fibs. Why not? You can combine that. So you can combine Fibonacci, Alligator, fractal, candlestick pattern. Voila, you got a great plan already. Now, 4-hour chart is stable, very stable for Fibonacci. You can use lowers as well, lower time frames as well, but then you're just be more careful, as I said Wednesday, with placement. Be more on guard for the fact that the fibs can break, and I guess we need a bit more confirmation that price is really stopping at those levels. Now, you don't want to move the fib. You want to keep the fib here to here on this swing high, swing low until it hits a target. So let me dive into that a bit more. First of all, you want to exit if the Alligator is on the opposite side. So let's say we had a bearish fib from here to here because the Alligator was bearishly aligned, right? In this part where there's a red box. You follow me, right? But then all of a sudden they're bullishly aligned. Does a bearish fib still make sense? No, right? We got bearish alignment. Now, if that alignment switches for a couple of candles, don't sweat, because here you can see, look at that green zone here. Well, we had a switch, but it was only for a couple of candles. Don't worry about that. If it's a couple of candles, okay, right? 5 candles, well, what is it here? 1, 2, 3, 4, 5, 6, maybe a bit more here. There could be 8 or 9 candles. But after it already bounced, by the way. So actually the fib was already used and then it switched. So that's a different story. Here we had 5 probably. So you get a sense, a bit of a sense. Now with a 50-minute chart, don't stay in a fib trade that's more than 96 candles. That's 1 day of price action. Don't do it. 1 day, staying in a fib trade more than 1 day on a 50-minute chart is not good. You want to get as quickly out of that trade as possible. If you take a trade on a 15-minute chart, if you take a fib trade on a 50-minute chart, max is of 1 day. Very, very max. Okay. So when do you want to move the fib? Because let's say, obviously, we have the bullish alignment of the Alligator, so we can use the fractal to place the fib from here to here. But when are we going to move it? Is it going to stay there forever? No. We're going to move it at one point. But when are we going to do that? So it depends on the fib retracement. If it's a shallow fib, like a 23.6 or a 38.2 fib, I wait for the minus 61.8 target. Here you can see price hit a shallow fib. So if price would have hit the 272 target here, which actually failed, I still wouldn't have moved it. I was waiting for price to get all the way to the red circle. Now, as you can see, the reason is because price can do this. Make a shallow fib, hit the 72 target, and then go down to the 50 fib, and then go out to the 61 target. Do you recognize this movement? Probably yes. And this is a fib pattern you see often, or at least you see it regularly, right? And it's a dangerous one because if you start to fib it from green circle to green circle, and you use the stop loss below this new swing high, swing low, boom, you just got stopped out. You used a too small swing high, swing low for this 4-hour chart. Price took out your stop loss, then bounced back right up to the target you had in mind. How many times do we see that happen? At least, it happens. Let's face it. It's not something that's very rare. So that's why I want to avoid this. I avoid that by when it's a shallow fib, not moving it if it only hits the shallow target. Now, if it's a deeper fib, like a 50 or 61.8, if it then hits the minus 272 target, then I do move it. So from here to here, the next fib would be from here to here. Why? 50 fib bounce, 272 target hit. So I can move the fib from, to the blue circle to blue circle. What happens then? Well, we get again a 50 fib bounce. So I can again move it to the red circle to red circle. That's the new fib, right? Again, a movement. Now, with deeper fibs, I definitely want to wait to the 272 target. With the medium fibs, the 50 or the 61.8, I would even consider moving it if the top or bottom is broken, depending on circumstances. I would not be as rigorous on waiting for the target. Because the reason is, these are shallow fibs, danger for retracement. These are deep fibs. That means that the energy out of the trend is gone. Means that there could be, it's more dangerous to fib upon the top or bottom break. If there are medium fibs, then actually that's a very balanced trend. It's retraced deep, right? But not extremely deep or not very shallow. So it's like, what I mean with that is that it's like a healthy retracement. It's a retracement you'd like to see, because when a retracement like that happens, there's just a good chance price will not go any deeper. And there's a good chance the price will just continue with that trend. There's a good chance that price will not turn back and just continue with that trend. So I like kind of those levels, because it's just it says that the trend is at a good pace. So I'd be willing to be a bit more aggressive with moving that fib in some cases. That's it, folks. So if you're interested in more info regarding this, first of all, if you're interested in this candlestick pattern indicator, just to write me at this email address. If you're interested in getting the webinar, the live webinar of Wednesday regarding the alligator and Fibonacci, you can use the same email address. Okay, and I'll send you the webinar recording so you can take a look at that. Or if you have any questions, you can write me as well. So if you have any questions now, by any chance, by all means, feel free to do that. And we have new webinars next week. Of course, we got recap Monday. Nenad's going to take a look at his setups. I have Tuesday, Wednesday live market webinars. I highly encourage you to join me on those two. We're going to take a look at patterns. We had great pattern trades on Tuesday. Beautiful pound dollar and dollar yen upside trades. And I think that's going to be very interesting. That's going to be again on Tuesday. Wednesday, I haven't decided yet. So if you're interested in the Fibonacci and alligator, or if you're interested in this candlestick indicator, let me know on Tuesday and we'll decide then. Or on Wednesday, we'll decide what the topic will be. Probably Tuesday, by the way. Wednesday evening, Nenad's going to take a look at multiple time frame concept. And then we got the big webinar, Price Action Strategies, June 2 and June 9. So that is basically a two-part webinar series, so we're looking forward to that. And this was actually decided by a Twitter poll that we held, and Price Action was the winner. So, well, folks, thanks so much. Wish you great trading. Talk to you soon. Cheers.